Hello, welcome to McBoss Capital channel. My name is Michael Chu, and you can reach me at this support@mcbosscapital.com email. Today we're going to talk about how to trade the top 30 stocks. I'm going to share with you how I come up with this list, and also how I actually go into and buy and sell, and when do I hold, how do I move my stop loss. So I'll be talking about all that, and we'll also be diving into each stock just to give you a sense of how I trade these stocks. And I feel like right now is a good time because the market has run up for about a month now in terms of its rally, and a lot of the top stocks are pretty much showing their true signs of leadership. And again, my list could be different than yours. Again, what I want you to learn from today and hopefully get something out of it is just the process. Everyone has their own filter criteria in terms of the stocks they want to trade, so that's fine. And also, like again, you might have different buy point strategy or even sell strategy. That's okay. Again, if you get anything out of this video, please like and subscribe. I really appreciate it. So we're gonna start diving into it right now. So here's my list of stocks. They're sorted based on price performance. You can see ZIM is at 102%, AEYE is at 98% gain, and so forth and so forth. There's about 460, around 460 stocks on my list right now that I follow. So how this list come about is basically most of these stocks have shown strong fundamental earnings strength. And when I say fundamental earnings, usually I'm looking at, if I show you my list here, give me a second. So I'm using Marketsurge from IBD. Again, you can use your own tools. I'm also using a proprietary McBoss Capital tool. But let me come into here just to show you what I'm doing. So one of the first fundamental trade that I use is the earnings growth. Especially the forward one, right? Now, you can see the column right here. So here's the top 30 on my list right now. ZIM is at the top. 112% estimated current quarter percentage, which means this coming next quarter, they're going to be earning 112% growth. So we go to ZIM. Let me jump to that. You can see this earnings growth right here, right? So last year, June is minus, it's actually negative. And obviously, it has turned around. So now it's growing. So 0.75 cents, no, $0.75. So we go to weekly here on Marketsurge, you can see better based on historical. So right here, so you can see negative, 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 and then it turns positive, right? So that's and then so this coming quarter is 112%. If I go back to it, to my list here, you can see it says 112%. So 112% is for the next, which is June quarter. So so just to give you an understanding of how that's calculated. So here negative 1.37 cents is what last year's June was. So when they say 112%, usually that means which is not this number here. So don't worry about this number. It just seems to match, but it's not the same number. 112% is basically meaning it's going to be 100% gain from that, which because it's a net number, so it basically means zero. So then 12% it means that it will turn positive. Now these numbers here, it could be this number 0.21 cents. It doesn't show 112 here because when you go from negative to positive, it doesn't calculate properly here, but on the other screen it does calculate. So it again, it's going to show a positive number expectation, and so that's probably the main criteria I use. There's lots of fundamental things that you can use, but again, IBD does have this green line earnings, rolling 4-quarter earnings, and you can see it's coming back up, because of this turn. So anyhow, that's the fundamental criteria I use. So if you go down this list, you will see they should all have positive numbers. And I do have a minimum criteria for 15% growth. Now, the only exception are some healthcare stocks. Generally, healthcare stocks, I'll give it to be more lenient. but that is a very hard rule for me. In general, there's always like stocks that are, gaining 10% earnings growth or 13% or even 14. Again, I'm not going to be, again, depends on the stock name and stuff. I might put it on my list, but but in general, it is a hard rule for me. Anything under 50%, I will not look at, except for health, because some health stocks, especially biotech and stuff, they don't usually have earnings right away. But they might have really strong future prospect, right? So think of pandemic, right? Like, Moderna and BioNTech, those two stocks didn't have any earnings, but they start going up like crazy because of the prospect that they're going to sell a lot of vaccine. So hopefully, I don't always go learn about the news or study the stock very detailed, but hopefully when you do buy whatever stock you want to buy, you should understand the fundamentals. Again, uh, something that tells you why you think the earnings will go up, right? So anyhow, so that's the main criteria I use for fundamentals. Again, I like to see potential growth coming forward. So those are important things. Yeah, there's so many fundamental trades, like especially on Marketsurge, they show so many fundamental trades. I used to trade like, literally look at all those fundamentals, but now I'm a little bit more lenient. I look at it from more of a technical perspective, because if the technical trade showing the price movement is significant, that usually implies the fundamental, right? Like price is everything. Because price, measures everything, right? Like the fundamentals, whatever, the macros, it will show up in the price. And so now sometimes it could be wrong, and it just goes up temporarily and come back down. That's okay. But just, and that's where, managing risk is the next important thing, right? After look at the fundamentals. So when I talk about the technicals, why I saw it based on price percentage is because usually when you go through a correction, like recently, like this stock is a good example, the market went through a correction. Sometimes they don't align, right? The stock and the market don't align. That's okay, because not every stock will top or bottom at the same time. But usually they are very similar time frame. It could be 1 week after the market bottom and then the stock start to bottom, or it could be before the stock could bottom, a week before the market bottom, and vice versa. Same thing when we talk about the top, right? Sometimes not all stocks going to top at the same time as the market. Some stocks are just so strong they keep going even after the market top. And so those are things to be mindful of, because that comes back also to the trading itself. Again, I'm a swing trader, I'm a momentum trader, I follow the trend. If the trend continues to be an uptrend, that's where I make my money. I don't hold long just because I like the stock. I'm not buy and hold type of guy. At least not for this portfolio that I'm talking about. So this stock, as an example, I'm going to turn on my markups right now, and we're going to dive into the details of this. Now, I do usually mark up. I started marking up my buy and sell signal on the daily chart rather than the weekly chart. I used to do it on the weekly chart, but I found that I couldn't go back and study why I bought it there because it was the weekly chart. Whereas on the daily chart, I could learn better what I did. So I try to learn from my mistakes, and no one's perfect, obviously. And hopefully, you might see some flaws in my trading strategy, and you can please comment on the video. And if you like any of this, please subscribe. I'm only gonna do my trading strategy video probably like every 3 months, and the reason why I'm doing it today is because I really want to reflect on how I trade right now at this moment. So what's happened in the market right now is it has gone up for over a month, and you should be at the top stocks already. You should have been able to find them, and then once you find them, then the next thing is to see how you're trading them. Have you got in enough position? Did you catch it right? All that stuff. And then now, we're at the stage where actually I'm starting to unload, right? So I've already bought my top stocks. Now I'm actually starting to unload to see who is the weakest one, even though they're strong, but I'm starting to unload the weakest one on my list because I'm starting to build up my cash position. As my portfolio has went up, now I'm starting to, get some cash, and then when the next correction comes, I won't be decimated, right? I have all these gains, I'm not going to give it back. So that's the way I trade. I'm not piling in, like, I'm trying to continue to raise cash, we're a little bit at a time. And every day I'm trimming, let's say I start with 30 stocks, I'm going to trim like 29, 28, and just keep trimming. At the end, what's going to happen is hopefully at the end of this rally, like whether it's 2 months or 3 months or 4 months, you should have your largest position in the top stocks, right, that are still performing the best. You shouldn't have the largest position at the most worst performing stock. That is the worst case scenario. So just that. So this is called pyramiding. So you keep pyramiding your money from the weakest to the strongest stock, so that your strongest stock that is performing the best. Of course, we're assuming they continue to perform, right? And then that's something you have to watch out for. Now, in most of my experience, I do notice the top stocks, they tend to continue to perform, right? If you do kind of give out, then yeah, of course, you take it out of your list, whatever, you saw it, and you just continue monitoring it to see if it comes back or if you see if it's really a top for them. Again, remember the big thing here is not every stock top at the same time. So some stocks going to top and then other stocks going to continue, right? And every time we see a pullback, right, which we saw on Thursday, was a very significant down day for a lot of growth stocks. For some of them, at least the ones I follow. So it was a big dent on my portfolio, and Friday a rebound. Now, I don't know if the market can top right now, right? But some of these stocks, even the market top, they may continue. So watch for that, relative strength, right? The outperformance against the market. So anyhow, coming back to this stock, the green arrows here depict where I buy. And again, uh, everyone has their own buy strategy. For me, when I see a stock, right now I'm using this strategy where I focus on the top stocks. So whenever the top stock make it to the top 30, especially at the beginning of the rally, I would buy it. Now, sometimes it could be extended. I still buy it. One of the things I've learned from the past is that when the stocks are outperforming others very early in the rally, they tend to continue their run because it's so early in the rally. Now, usually that's because of earnings. So they maybe have some good earnings and boom, they fly out of the. Usually the best ones are the ones that fly out of the base. And here's one good example right here. You see my green arrow right here, and it pounds out, and then it continued that for like 3-4 days, and then it finally take a break. And here's some consolidation, and look at that, it broke out again, right? Look at that, I add to it on Friday. So again, this video is based on May 24th, 2024, which is very recent. Like this, if you watch this video at a later time, the strategy is the same that I'm going to follow through, and maybe I'll have subtle changes over time. But let's say every 3 months, I'm going to try to do this, something similar to this, especially when there's a rally that's been happening for a month or so, because I want to show you what the top stocks look like, and when they top, maybe I'll do another video when they top, just to show that, hey, how did I handle the tops and stuff, right? Like maybe there'll be more specific examples I can go through at that time. But right now, these stocks are flying. This is the number one stock. It's already gained 38% from this breakout. Now, again, most people will have a certain position size. Hey, I'm only going to buy up to 5 or 10% of my portfolio and I'm done. First of all, I'm very diversified at the beginning, right? So when the rally starts, I don't know which stocks are going to lead. So I could have 50 stocks, and then I start to dwindle down to the top 30, and then I start to go down to the 20, and then to the 10. And usually I use a time frame and also the performance. If the performance are weak, I'm going to sell a lot more. If the performance is strong, I'm going to try to sell just a little bit just to raise some cash. So, again, this is now 1 month into this rally. At the beginning, I'm just constantly going to buy as the stocks get stronger. And you will know by just looking at the performance of the stocks, right, in the top 30 or 50. Most people won't have the time to do what I do. But if you have the time, like even if you do 10 or 15 stocks or even 5 stocks, just try to, understand that they should be in the top 30 or 50. Because, and I'm more focused on the top 30. But like I said, at the beginning, I don't know who's going to be the leader. I generally buy up to 50. Okay. And also, when I say top 50, understand that it will move in and out, right? It doesn't mean like, oh, this week's rank 40, next week could be rank 60. So that's why I will put initial position size, right? Whatever your initial position size, and then I say, hey, what is the add-on? The add-on is usually much smaller, like maybe one half or even lower than that. So these are the green arrows here are my add-ons, right? And sometimes I will keep adding as long as it shows strength that day. So if tomorrow it shows strength again, I will add. The next day I'll add. Again, the idea is to pyramid into your strongest stocks. Whichever stock's not performing, you take money out of that and you put it into the best stocks, right? Because that's the thing, you don't know how far the stocks will run. It could run 3 days, 4 days, like or much longer. Right now, just by looking at this chart, like I don't know, I don't usually have targets, but it looks like it could go to 25 here, right? Like just by looking at this, like usually it will uh, gain the same amount as the correction. That's not always the case, but just on hindsight, right? Like I don't usually have a target, just like I said. So the strategy is to pyramid into the best stocks, right? So okay, so let me come back to. All right, so I'm gonna. This is right now. I changed the date back to May 9th, just to show you what has happened as I trade this. So when it came out right here, I bought into it, as you see from the green arrow. And what happens is initially, when especially on the breakout or on a first buy, depending where the stock is, I'm looking for the previous support level. So when I go back previously, like where usually I look for the last down day, and that's usually very easily to find by just knowing the color, right? Like red is a down day, and that low is where I draw the red line. Um, and that's where I would set my initial stop. Now, sometimes it could be really far apart, like over 10%. Like it's just more of a like I will change it, right? Like as soon as each day goes by, I change it. So it's not a big deal for me. Like unless something really bad happened on the next day and gap down like 20%. Again, you gotta watch for was there earnings coming out soon and all those things, right? But usually I just set initial like that's one of the things that I've learned over time. Is always set initial stop no matter what, even if you don't plan to sell, right? Just so you have the habit of setting stops. And then the next thing is, so we're gonna move out the next day to May 10. Okay, now it move up more, and I believe I bought it there again. And then you add that, and then now, so one of the things that I do count how many days it has been moved since the last support. So look, when I say last support, like I say, I'm looking for the low of the last down day. Now that's always like some sort of support where hey, it didn't sell lower than that, right? Wherever there's selling pressure and that low is the lowest that it could go to, that usually like a support level becomes a support level, especially after it moves to a new high. So this is, again, this is this moving date thing feature is not the best, but so this is the low here. As it move up to new high, so as it move up to new high, like this support level is further and further away from it, and at some point in time, it's gonna get tested again as it goes up. So let's move forward again. And then guess what? It did another one. So then I bought again. Like even though it's extended, like you can tell it's already 23% extended from this buy point. Again, I'm not buying, I'm not adding because hey, I think it will go up more. I'm adding here because there's strength in the stock and I know it will pull back and I'm gonna take a little bit of loss there. The question is, can it continue further, right? At some point it's gonna get tested. So let's keep going. So now we see some testing happen. It rose 27%. Marketsurge marked this because it has gained 20% in less than 3 weeks. That's one of the rules they have. That's why they marked this. But it was a downside reversal, right? Like, well, it wasn't down on the day, but it did close at the bottom. So now we're starting to see some, selling here. Okay, so I don't think I bought that day. Keep going. Okay, next day, you can see now it fell further, but look at where it closed. It closed near the top. So the selling could be done here. We don't know for sure because the first day of selling is hard to tell. So let's see. I mean, the volume is okay. It's not like super higher than previous day, but it seems okay. So let's keep going. All right, the next day it moved up a little bit. Again, doesn't really tell us much because it didn't make new high. So I generally don't buy or add if it doesn't make new high. Like that's one of my rule. Because think about this, right? You have this top right here. You draw, again, one of the things I do is I draw trend line across the top. This is a downtrend right now because it hasn't made a new high. But if it did make a new high, then yeah, then it definitely especially like it has to close near the top usually. So this didn't make a new high. So you know you don't add to it. Okay, now the next day it down a little bit. Um, Again, didn't tell us much. It didn't go down a lot. You know, remember my stop is still down here. Probably by now I have moved it up a little bit. Now why I move it up here is probably because like you know I usually like to count how many days. Generally, you know 2 to 4 days at the beginnings is fine, but you know, but on average it's about 4 to 6 days. So once it's been 4 to 6 days, usually I would move my stop, because I have given enough time, you know, to see where it's consolidating. So you know, so we're here 1, 2, 3, 4, 5, 6. Like you could even go as far back, like I don't remember exactly, but you know, it's either this one or this one. So you move your stop up. The red line basically means that's where my stop. So unfortunately, this time frame thing doesn't work with the markup. So you're gonna see markups I already put in from before. So now we see a newer high here, right? And that's a good sign. You could add it there. I don't know if I did. Can't tell from this picture right now because the markups is kind of all not in line right now. But maybe I didn't. But I definitely would have moved my stop up here now. So it's been like, you know, 3, 4, 5, 7 days now, right? So again, why I didn't move to this stop right here is because it's too close. Like, I mean, 4 days is okay, but generally, like, you know, I like to go closer to 5 or 6 days. But you could move, you know, 4 days because what happens here? We did make a new high, and again, it depends how you want to trade. Sometimes I'm more lenient, sometimes I'm not. There's no, you know, the stop is really just to protect your gains, especially after you have gains. So let's move, continue. So May 21st, now we are May 22nd. Actually, May 21st. So this time, see what happened? It actually undercut this low right here, right there. Right? So if you set that low stop there, you would have been undercut. So I didn't. I was still right here. So it didn't undercut because again, sometimes 6 days might work, but 7 days is probably better. But again, it depends. You know, there's no. It's like sometimes it's just luck, right? You don't know, right? And again, like whether you set it or not that day, like because you know, not every day I change it. Sometimes I just forget and I miss it. You know, in this case, I didn't move it. If I did, like I say, if I move it here, it would have undercut that. I would have got kicked out. Look at where it closed at the top, near the top, right? So that's a good sign because it bounced. Also, the other thing is it bounced off this green line, which is 10-day moving average. So that's also very powerful when it bounced off a moving average. All right, so let me just clear all these lines I draw so it's less distraction. Okay, so let's move forward. So we now in this week of trading now, May 22nd. So oh, look at that. It bounced back. It tries to make a newer low right here. You can see, but it tested that low. So if you set a low, I don't know if it made a new low on compared to the previous day, but like, we can take a look. But if you did, it might have kicked you out again. So, so it's just, you know, 1719 and then 1711. So you see, it just nick it by 8 cents. If you bought that day and you say, hey, I'm gonna set a low there, just by 8 cents you could have got kicked out. And some people do that, and I do that a lot too before. But now, like I said, at the, you know, it depends on your risk tolerance. If you're in a healthy rally, I would give it more room because sometimes traders will just do this just to knock you out, some of the traders. And in this case, like it bounced back really strong, and I didn't get knocked out. And now I have a really good, feeling now that this stock could now take off because it's been tested once here, right? On this, sorry, I have to draw the line again, right here, and then second time here, and then the third time here, because remember, you got nicked by 8 cents. 3 times been tested, and 2 times now I found support at the 10-day, like touching it. So this, I'm having a good feeling now, right? So next day, it bounced and closed at a new high, right? So that's a really good sign. And then yesterday, which is the Friday, May 24th, and this is where it took off again. So this consolidation is basically done. It's been tested. It go to new high, and this I added to it because it came out with this nice short consolidation pullback, whatever you want to call it, and I have moved my stop to here now because it's been tested so many times. Also, it's really far from here now, percentage wise. So I have moved it up, not by much, and that's the thing. Now, again, when you want the top stocks, they're going to be more volatile, but they're also going to be the big winners. So you have to understand this stock is $20 also, so it's going to be more volatile than usual, right? It moved $1, that's like yeah, that's like 5%, right? So, move $2, that's 10%. So you have to understand that the lower dollar value stocks, they're gonna move more. Again, whether this is part of your list, I don't know, but this is how many, like almost $100 million trading volume a day. So it's not a small stock, right? It's not like a 5-10 million trading volume day, dollar volume day. So yeah, so there's a lot of trading in this stock, but it is a little bit more volatile than others. But I'm just showing you the process, how I trade, and yeah. Oh, right. The second stock on the list is AudioEye. Now this one has been running for quite a bit, also a lower dollar stock. My first buy is at this pullback right here, and then I set my stop here. As it move up, I keep adding, and then I keep moving my stop up, and then I think by the time it got up here, quite extended now, I know a pullback is coming, and I move my stop up here. It's about, like I said, 5, 6 trading days usually where I would move my stop, sometimes earlier, depending. And then here, a pullback again. I think by this point, I have because it's like around 6 days or 7 days, sometimes depends. I have moved my stop here. It got really close to undercutting this one, but it didn't, and then it bounced back, right? So Thursday was a nasty sell-off. Any stock that didn't undercut that Thursday and rebound strongly, I have moved up the stop. Again, this is usually I do have the 4 to 6 day rule, but because of this Thursday nasty sell-off, most people will have sold that day. And because it rebounds so strong on Friday, I mean, this was a 15% move, that I have to move that stop up. So again, you don't know exactly where it will pull back to. That's the biggest challenges, right? So as the stock goes up, let me just refresh this screen. And as the stock goes up, let me also take out my marks up just for a second, just so I can draw something here. When you think of a stock that's going to become the leader or make lots of money and perform well, it's always going to go up, pull back, go up, pull back. The question is, how big is that pullback, right? Now, obviously, by looking at this chart, you can see this is like, kind of like the upper channel line. But what's more important is it goes up and it pulls back right here. It goes up and it pulls back. It goes up, it pulls back. And sometimes the pullback is more significant. So in here, you can see like, most likely if you're doing what I'm doing right now, you could have been shaken out because this is like, if you do the 6 or 7 day rule like me, generally that low, I move my stop up here. And then as it goes up, you can see right here. Now, as it pulls back, depending where it is, I'll ask myself, like, should I move the stop or not? If it's too close, I usually don't. I'll just let it run. If it does trigger my stop, like right here would be the stop, let's say, so in this case, it probably didn't trigger it, but here it probably did, just because it did pull back all the way to this line right here. And then it goes up, pull back slightly, goes up, pull back slightly, goes up, pull back slightly. So again here, like, you have 3 days up here and then 4 days down. That's 7 day, probably, that's where my stop is. So if I now, so what I'm trying to illustrate here is that anticipate this pullback. It will always happen even on a strong uptrend. But where you set your previous stop is very important because you get triggered. And that's fine if it gets triggered because that's sometimes I do buy it back. If it's rebound really strong and it just, shake out some people, it does happen. Like in this case right here, it did happen. So yeah, but the more important thing is I want you to understand that, do anticipate those pullback. Ask yourself, would you want to get triggered if you move your stop too close? Sometimes you do. Maybe you feel like the market is getting weaker and weaker and weaker, and you want to move that stop, right? Like I did right here, because Thursday I feel like this is a shakeout day. Any stock that has been shaken out on Thursday, that should be the low. And especially if Friday bounce out to a new high, I feel like it's safe enough for me to set this as my low, my stop, so that if it does come back, that's a really negative sign. Like you already been tested here, you're gonna fail. That's really bad, right? That's, to me, I don't want to hold this stock anymore. Like right now, if it rebound, I want it to continue to rebound and make new high, and so and go higher, right? That's what I want to see. So usually, like I say, I move my stop after I know a test, especially have been tested at a higher level, right? So not only where I set my stop here, but as it goes up and it comes back, where has it been tested? Is it enough of the room for me to continue on this ride? Because that's the whole goal, is that you find a stock that is at the top performer, you want to ride as far as you can. But sometimes you still need to manage your risk, right? You can't have like 20% gap stop, right? Like that's too much. And sometimes 10% may be too much too, depending on the stock, right? So too little, right? So you have to find that happy medium. And for me, I like time frame more than the percentage because I noticed that stocks tend to like pull back after a few day run and come back a few day, 2 to 3 days, and then go up and then 2 to 3 days. Like you see that in this pattern, like constantly. So that's why when you add up the 3 days up and 3 days down, the 6-day rule seems to work really well in most cases. Again, it's not perfect, but to each chart you have to, that's the art of like figuring out where is the stop you should use. And over time, hopefully you will get comfortable with that and be able to set so that it's not too close and it's not too far away. Because, if you have a really bad down day, like you're gonna drop 20%, hopefully you only give up 10% of that, right? And not give up the other 10%, something like that, right? I don't know in terms of percentage, but just an idea. So, especially stocks that run up a lot, they tend to fall hard, right? Like, I'm sure everyone remembers like SMCI. This was a stock last year that, did really well or early in the year. And this 1 day move is significant right here. And so that's something that I always try to remember this example. It was down 20% that day, right? Now, I mean, there's not much you can do, especially if your stop is like, so here, I'm not going to talk about this other than this example. It's offensive selling. right? So what I've been showing you is the, moving that stop is at the bottom of the run, right? So you're moving the stops up just to protect what you've already gained, but you're still not going to gain the most. The way you gain the most is by selling near on the highs, right? As it make new highs, you sell. And that's what I did here because the run was so significant that I have to start selling. And you see those red arrows? Those are actually my selling, like, and taking profit as it goes up. Even though I didn't sell on the last day, but that's the thing, you don't know how far it go up, right? But I did sell a lot here, pretty much all of it. But I still have a significant gain. So this is an example of offensive selling. But in most cases, unless a stock run up like crazy, and you can usually tell, right? Either the chart is starting to look parabolic, so it like kind of curves up, like it kind of curves up like this, right? Almost like vertical, like, and it show up like 20% here easily at the top. That's usually near the top. It's time to take some profit, and you need to learn to recognize those kind of patterns. Otherwise, if it's a stable, just going up slowly and like slowly as in like normal conditions, normal pattern. Let's come back to audio eye for a second. It's starting to look a little bit parabolic, right? You can see, the chart overall is still okay. That's why it has this pullback. The pullback is going to normalize the curve, the uptrend. But if it start to curve up and don't pull back, that's when it's a little bit way overextended. And those are times you should always take some profit. Even you know, even if you think it can go higher, like just take some. Like whether it's 20% or 30% or half or whatever, just take something. Like even a little bit, like 5-10%. It will make you feel good. Because if you were wrong and the next day, like it comes back down like hard, like what happened to SMCI, and if you didn't take any profit, you just lost 20% right there, right? When you could have 20%. So that's why I always like, if you think that it's a little bit extended or overextended, definitely sell something. It will make you feel good. Even, and if you're wrong, you're wrong. That's okay. Like you took profit, man. Like what else you can ask for, right? So like right here, I know it's a little bit extended. I didn't take profit. The reason why I haven't taken profit at this stage is we're 1 month into this rally. And even though this stock is quite extended now, but it hasn't shown the kind of craziness like SMCI did, like a 5-day run or a 10-day run or something like that. But I don't know. Maybe this is the top. I could be wrong. All I hope for right here is that it doesn't actually drop 20% one day, right? Because I still have my stop here. So that's the worst case scenario. So always ask yourself, are you comfortable with that stop? But like I said, if you set it too close, you get tricked, right? So those are the balance, and this is the art of this trading part. Right. So this is an example of a stock that I missed the initial run. It broke out right here, came up, and kind of go sideways, which is very promising. And then it broke out right here, and then it pulled back. And I decided to add a position. So the problem here is, so I set you can see right here, I set my stop here. And as it moved forward, I set my stop there. And my initial stop, just because I didn't want to give up too much on a new position here. So that's another thing. If you're late to the game, you may not want to give up too much room, right? So that's one thing. But anyhow, as the days go by, you can count 1, 2, 3, 4, 5, 6, and by the 7th day, it tripped my stop here. Now the next day, it's hard to see here because it actually was opening up higher. Now it didn't make a new high, so that's probably a problem there. But I thought, hey, maybe it's rebounding, and because it's hitting the 10-day. But what happens by the end of the day, it actually closed at the bottom again. So that was a negative thing, and I did set my stop to that day when I bought it, and it fell. Okay, so it fell twice now. So I'm pretty much done with this stock, unless something, it did come back on Friday afternoon. So you can just take away the markups. You can see it actually make like a 10-cent higher high than the previous day. But yeah. So I don't know. It could be a rebound right here, because it found support near the 21-day here. So it's possible that this might actually come back. This is the number three performing stock on the list. Again, this is under $20 stock. So for it to move 5-10% is very easy. So right now it looks pretty good. But again, I don't, because I already fell twice here. I'm gonna wait for a strong signal. But if it does bounce back above the 10-day on strong volume and close on the high, and especially after the stock that did, I got trip on the stop side, probably I don't buy at the beginning of the day. That's something good to do. Don't buy at the beginning of the day because it could close at the bottom by the end of the day. So wait till it kind of close above this trend line, and then near end of the day, if it still maintain that gain, then it's more highly likely that this rebound will continue. So something to learn about in that case. So yeah, not every stock, at some point you're gonna get tripped and you have to decide what you want to do. The reason why I bought that in so quick was because this was the only stock that was tripped in my top 30 stocks. And I was like, this is number three or whatever. At that time, it could be number 4 or 5. I don't even remember. It was probably even number two. I was like, maybe. And then when I saw that rebound the next day, I thought, hey, I gotta get back into it. But let's say I got tripped again because it was a false rebound. And but let's say I still number three on my list. So let me come back to the list now. So here you have WGS at 90% gain since the April 9. I'll just go through this list, this top 30 list, ASPN. So right now I don't own WGS. That's what the red mean. ASPN, VITL doing really well. I do want to talk about VITL. So this is my biggest position right now in my whole portfolio. And the reason why it's biggest position was because I got in pretty early. Like pretty much near the beginning of the run. And this stock has been superb. So let me put on my markups. So the recent pullback on the market, what this stock did was going sideways. And I got in pretty early. Like you can see my green arrows right here. And now it looks very squished because it has come up a lot. But if I put on the date there, yeah, April 19, April 20, this is when it's starting to, take off. It's a very nice, it already has a huge run right here, which I missed completely, back in February, March. But then it went sideways, and then it came out a little bit, and then it had one test right here, which luckily I didn't get tripped, right? Again, if you have the 6-7 day rule, usually you're pretty safe, usually. And anyhow, and then it's starting to move faster. And then the earnings came out, and that was my jackpot that day. And then ever since that, I just hold it because I didn't even sell here because the market rally is so early, right? At that moment, that I feel like, and a lot of stocks are doing well at that time. So I feel like, I don't want to take any profit. So it did pull back 2 days, and then it kind of bounced after that. So now we're at new highs. And it still look very decent, this chart. And you can see my stops keep moving up. And right now we are 6 days behind on the stop. So there you go. So there's POWL, TMDX, First Solar. Again, I'll talk about First Solar because I did mention it earlier. I didn't like this stock, it just bounced from the bottom, really. There's not much you can do, on the initial bounce. I didn't have this on my list. I don't know it was negative earnings before. Probably not. I just missed it somehow. So I was late to this one. Um, and you can see how fast the gain happened in the last few days. Um, yeah, so the last 4 days. So unfortunately, like I say, I missed this run right here, and maybe it wasn't. I can't remember if it was on my list or not. But maybe it wasn't performing as well. Yeah, maybe that's the reason it wasn't in the top 30. And then all of a sudden it start moving. And let me show my markups. Um, yeah, I don't remember where my green arrows is, so I can't tell you exactly where I bought it. I forgot to mark up this one. But yeah, I think it was on this big day I bought it. This come out right here. So I was late to the game. Um, so so this is Bluebird in the transportation group, and this one had again a lot of stocks recently in this recent rally. They bounce off earnings. When the earnings came out, they bounce. Now they might have, like you can see here, there was a pullback, pretty long pullbacks as well. But the earnings is what triggered it to really get out of this area. And sometimes, my rule of thumb is depending, like if it's already extended, how far it is from the base, and so forth. So we have this original base right here, and it came up to here, and then it pulled back, which is a decent pullback here. And the time frame is enough. Like there's over 20 sessions of pulling back here. Most people would have been shaken up by then, and then it bounced right here. Now I didn't buy the first day because I think I just missed it. Like it wasn't on my list. And then when I found out about it, the next day I add to it, and you can see as I add to it as it goes up. Even yesterday I add to it again. It didn't make a new high though, so it also closed at the bottom. So I'm not sure if this is the top right here, but as you see, my stops has move up. Now it's near this level, which is about 7-8 days down from it. Now there's really no other level I could move it up to. Like this one was tested right here, and it didn't trigger my stop. It got pretty close. So now I feel safe at this level. So I'll just let it be, and let's see if this will continue to move up. So Moderna doing really well. Oscar, um, let's show this example because I think I got tripped on this one. Now, as I said, I could buy these stocks back, right? Because they're in the top, really top of this list. So as long as I'm still, considering the whatever top. But anyhow, this chart you can see it has kind of not come back, right? Um, so so yeah. So I'm gonna delete the stops here just to show you like my stops, as I'm moving up, I keep moving them up as usual. And then, okay, I can't delete this one, that one. But here you can clearly see where my trigger line is. And again, this is like 7 days, 8 days, and then by this day it tripped it. And and then after you trip it, that's one thing. Then that Friday, because again, Friday was such a it's supposed to rebound, right? That's the rebound day, and it didn't rebound on this stock. So that tells me there's weakness on this stock. Now it's at the 21-day line, very similar to WGS. We'll see what happens here, but it didn't rebound at all on Friday, which is not good. So even though it's at the top of my list, so some of these stocks might have started to top. I don't know, but it looks like it's starting to top. So again, not all stocks top at the same time, and that's something you have to remember. And so yeah, anyhow, going down to my list, ASC, CAVA. I had to talk about CAVA. It's probably the most like easy to hold kind of add-on stock. It has been doing really well, surprisingly. Not because I was surprised about it, just because so many people talk about this stock, I thought it wouldn't work. And sometimes that happens, right? When so many people talk, I mean, Nvidia, everyone talk about it, it works. So sometimes performance is, is still the most important. And people have shown that their restaurants are doing well compared to Chipotle. So now this is very important. 3 days EPS deal. Because I have pretty large cushion now, I can probably go into the earnings. Hopefully it doesn't drop 20%, knock on wood. But I have my stop here setting. You can see it's been tested many times around this area, this last stop right here. And even recently it pulled back, like I said, I probably could move my stop right here to Thursday's low, and even move it higher. But Friday is a nice breakout. So I'm just gonna go through the rest of this list: FLNC, CRS, SNAP, HROW, ATGE, CR, MRE, GEV. So I don't own CMRE. It just came onto my list. It's doing really well. It's in the same as ZIM. It's in the same group as ZIM. GEV is something Charles Harris just bought into. I don't know if he just bought into it, but he's definitely owning it right now. He was talking about this on Friday, and I'll show you this one. I could trip once, and then I bought back into it just because it shows some possibility that it will work. So here's my I already took out some of the stops from before, but you can see my green arrow showing how where I bought it as it goes up. And then here, as it consolidated, I was still buying because it didn't trick. I think probably right here was the last stop right there. And then what happened was right here, this day, it was Thursday. It was a downside reversal day, just like the market. And I don't remember. There was no trigger on the stop, but I decided to sell it. So that's another thing, right? Sometimes you might want to sell it just because the market is weak, and also because this stock was like maybe like not in the top 30, maybe like so I sold it. But what happened on Friday? It started out really slow, and I don't know. It was on IBD Live, and over time it really catch on. And look at where it closed. So even when Charles was talking about it start to move in the morning, and I said, it is bouncing back, and then as soon as it hit this high right here, I think I bought in, and it continued to strengthen and stay at the top. Now, again, in terms of positioning, I didn't buy back the same position that I had. I just did my initial position. That's something, I'm not sure whether I should buy back the same position. Sometimes it could, like I said, it could fail the second time, right? So just so you know, right? So there's no right or wrong answer. It's whatever you think is good for you at that time. But for me, I just bought back only initial position. But yeah, GEVs right there, AVAV, PI, CAMT, PHG, FN, PDD, BRT. I mean, VRT just probably, and then you have PRCT, LNTH, ANF. So that's the top 30. I just want to show you this list because that's what this video is about, how to trade the top 30. And obviously they can move in and out of position. Like, you can see here 31, 32, 33, 34, I also own. But as time goes on, my goal is to keep shrinking this list. Eventually it'll be 25, eventually it'll be 20, eventually it'll be 15 and 10 and 5. And hopefully that's when the market top. Now, there's no perfect answer how you want to manage this, but the idea is to keep pyramiding into the best stocks. And you know what? Some stocks are going to do even at the 20, 30 level, like 30s here. Some of them are going to do well. Like, Nvidia did really well. It came back to 38 right now. I didn't own it. I owned it initially, but I dropped it because it wasn't performing as fast as others. But recently it has come back, and that's okay. Like, you're gonna miss some of those ones that will perform well all of a sudden, and even the ones that come late. There's no timing. In terms of timing, there's no perfection, right? Every stock moves at their own pace. Sometimes move slower and sometimes move faster, and it can turn around very quickly as well. So there's no perfection. If you try to perfect that, that's impossible in my mind. But just understand, hey, as you pyramid into the best stocks, when I say pyramid, any stocks that show strength, I continue to buy, and any stocks that show weakness at the bottom of this list, I continue to sell. And at some point, you're going to leave with your last 5 stocks with the highest position. And that's the goal, right? And we don't know how far they'll go. When the top will happen, that's the whole idea behind this. Okay, I'll finish off with VRT. VRT is a very good stock, in my opinion. It's probably the strongest leader, and I think even stronger than Nvidia. From a large cap perspective or from a sizable stock perspective. You can see this stock has been running a long time now, since last year, September, and then it started to move up at a different angle here. And then it goes up higher here, and then it goes up higher here, and it finally had this one pullback to the 50-day, and that was your last opportunity to buy at a lower price. And then ever since it just bounced off the 10-day right here, even in the most recent action. Now I didn't get trip out on this, but I did sell it because of just little bit underperformance here at that time because there were other stronger stocks. But now I bought it back in on Friday. Yeah, like so it making you high. Um, Sometimes you're just gonna get in and out a few times and maybe you won't make money, but that's the whole point is you try to hope to catch on that ride and see how far it will go. But this has been a superior stock if you just buy and hold. But again, I'm not talking about buy and hold for me myself here for this trading strategy. So let me go through the list of things that I marked down right here. So again, we are focusing on stocks with momentum. The strategy is to keep pyramiding into the top stocks. Understand that the tennis ball action, meaning like it'll go up and then it'll pull back, go up, pull back, pull up, pull back. So how to handle the pullback is very important. When you set your stop, you don't want to set it too far and you don't want to set it too close. How to handle basically you need to know that the relative strength, how it's performing against others. Again, this is very hard. There's no way to balance this completely. Sometimes it'll just start slow and go fast. Sometimes it'll go slow, go fast, and then it'll go slow down. So there's no right or wrong answer. I usually, like I said, the best stop is usually the last support low, and then that could be anywhere like 4 to even 7 days. But generally, 6 days is where I would change the stop if there's a support level that's higher, especially after it make a new high. So that's very important. After it make a new high, look for the 10-day to also catch up, right? So sometimes it gets too far, but this one you can see it riding the 10-day really well, like the green line. But some stocks will be a little bit extended and they might be too far from the 10-day, expect a pullback when you see that. So because that's and you can do offensive selling there too, even a little bit like 10-20%, trim it and then buy it back when it comes back lower. That's also doable. So that happened with Audio Eye, right? Tighten stop when market is not reacting well. So if the general market like Thursday didn't do well, like you could tighten it too. Of course, you're gonna get tripped more, but it's just to protect yourself, right? If you have gains already, you protect yourself from those gains that you made. You don't lose back too much. But yeah, and then if you do, like on Friday, if you feel like a strong rebound for that stock, you could buy it back. If you got trigger, best obviously is that it didn't trigger and it bounced back. Um, yeah, so Thursday again, downside the reversal low was really bad for the market. But the market did come back on Friday and look at your stocks, they come back and make a new high. Those are the ones that are probably quite impressive. Um, Again, I already talked about this. I only buy on higher high after from the compared to the previous day. Um, I also talk about defensive selling versus offensive selling. There's no right or wrong answer, based on, if you feel good, if you feel too good, probably take some gains because usually when you feel too good is when it's time to sell. Um, and we'll talk about this first buy. Setting your stop is not that important because usually it doesn't come back so I give it a little bit more room, especially if there's a gap up day from the beginning. Um, yeah, look for new closing high. That's always a good sign to move your stop. Um, so and look for a multiple support area. Like the best stock I could think of this right now is POWL. So POWL did where is something very similar right here. So we see this area got tested quite a bit. Um, right here. You see like one, two, three, four, like quite a bit right here. You draw a down bottom here, and then what happened was it came out, and that day was very significant gain. 13%. And let me remove my markup again. Okay, so you can see, I bought some here, I bought some here, and I just got lucky and it never tripped my stop here. And then you can see, like, as I move up the stop, even very little increment. Uh, now because it came up here, I was able to move it up more. Now it's still pretty far away, so I could give back a lot if something happened. But yeah, I probably start to move my stop here as well. This is 4 day. Again, there's no right or wrong, but just make sure, if you want the big run, if you want to catch the big run, you can't put the stop to close. Try to move your stop after a new high. That's always a good one. Um, Thank you for watching this video. If you like this video, please like it and share it and subscribe to this channel. I will try to do more videos like this in the future, especially at good times in the round. Thank you.